It's a new trading day. Welcome to Modern Investing Techniques, episode 14. I'm Patrick in Vancouver. Today is April 7th, 2026. Here's your daily market intelligence and today's practice trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Samsung forecasts 8-fold first quarter profit jump on artificial intelligence memory chip demand while oil surges above $110 on Iran deadline tension. North American markets opened with cautious optimism this morning. The S&P 500 sits at 6,612, up 0.4%. The NASDAQ Composite sits at 21,996, up 0.5%. The TSX Composite sits at 33,182, up 0.2%. Geopolitical risk around President Trump's Iran ceasefire deadline is pushing oil above $110 and lifting gold as a safe haven. The International Monetary Fund warns of higher prices and slower global growth. Canadian investors should watch Toronto home sales rebounding on lower prices and health insurers climbing after the United States lifted 2027 Medicare Advantage rates. The dominant theme is selective opportunity amid elevated uncertainty. This is exactly the environment where disciplined, data-driven strategies can separate outperformers from the index. While the broader market navigates these cross-currents, one fixed income strategy becomes especially powerful when rates or inflation are rising. Let us move into today's strategy spotlight on floating rate note rotation in rising rate or inflationary regimes. Floating rate notes are debt instruments whose coupon payments reset periodically. The reset is typically based on a reference rate like SOFR plus a fixed spread. This built-in adjustment mechanism protects investors from duration risk when interest rates rise or inflation accelerates. Today's combination of oil above $110, the International Monetary Fund's warning of higher prices and slower growth, and persistent geopolitical tension makes floating rate notes particularly relevant. Canadian investors holding bonds inside tax-free savings accounts or registered retirement savings plans should pay close attention. Implementation is straightforward on platforms like Questrade or Interactive Brokers. You can screen for investment-grade floating rate notes or simply use exchange-traded funds such as the iShares Floating Rate Bond ETF, ticker FLOT, or the Invesco Senior Loan ETF, ticker BKLN. Focus on credit quality, reset frequency that is monthly or quarterly, and the quoted spread over the benchmark. Track the effective yield relative to fixed-rate alternatives using your broker's fixed income screener. Historically, this strategy performed well during the 2021 to 2023 rate hike cycle. Floating rate notes materially outperformed long-duration government bonds in that period. The primary risk remains credit deterioration in the underlying issuers during a sharp economic slowdown. Always size these positions to no more than 10 to 15% of your fixed income sleeve. Rebalance quarterly as spreads compress or widen. With inflation and geopolitical risks front and center, it is also critical we talk about how liquidity itself behaves during these shock windows. That brings us to an important lesson on bid-ask spreads and liquidity fragility in geopolitical shock windows. Imagine you placed a market order for a mid-cap energy services stock at 9:35 this morning as headlines about Israeli strikes on Beirut and Trump's Iran deadline flashed across terminals. Your order filled at $48.75. Yet when you checked the tape, the prevailing bid was $48.10 just 90 seconds later. Market makers widened the bid-ask spread from a normal 4 cents to 65 cents within the first 30 minutes of heightened geopolitical news flow. They were protecting themselves against inventory risk while retail flow rushed in. In today's pre-market environment, with oil above $110, average spreads on energy and defense-related names expanded 3 to 4 times their 20-day average. Algorithms detect volatility spikes, reduce quote size, and widen spreads until order flow balances or volatility normalizes. A $10,000 round-trip trade that normally costs $8 in implicit spread cost can suddenly cost between $65 and $130. Professionals always check the level 2 tape or time and sales window before hitting market orders during news events. They set limit orders at or inside the national best bid and offer rather than chasing. Canadian investors using Wealthsimple or Questrade can enable advanced market data add-ons to see real-time depth. The biggest misconception is believing liquidity is always there when you need it. In reality, liquidity evaporates precisely when you need it most. Always verify the 20-day average spread and current quoted size before trading names exposed to geopolitical or commodity shocks. Understanding liquidity risk is essential before we put any capital to work, even simulated capital. Let us move into today's practice investment of the day. This is a simulated trade for educational purposes only. No real money is involved, and this is not financial advice. Trade type is weekly hold. Today's pick is SSNLF, Samsung Electronics American Depositary Receipt. It trades on NASDAQ over the counter. The strategy is an earnings surprise momentum play on artificial intelligence memory chip demand. Hold period runs Monday to Friday. The catalyst is strong. Samsung forecast a record first quarter operating profit far above analyst estimates, driven by booming demand for artificial intelligence memory chips. On the technical setup, shares rose nearly 5% in early trading on the news. Price now sits above the 20-day moving average, with volume running well above the 20-day average, confirming conviction. Nearest support is the rising 50-day moving average. Risk assessment includes the possibility that escalation in Middle East conflict could trigger a broad risk-off move in semiconductors. Suggested stop loss is 6% below entry. Maximum acceptable loss is 8%. Target for this weekly hold is between 4% and 9% by Friday close. Confidence level is medium. Strong fundamental catalyst and immediate positive price and volume reaction are aligned. However, the geopolitical oil spike above $110 introduces macro uncertainty that could cap upside. This simulated weekly hold demonstrates how to separate genuine earnings-driven inflection points from noise. Use immediate price confirmation and volume validation rather than headline chasing. Listeners should practice screening for the phrase forecast far above estimates combined with real-time volume surge, then apply strict position sizing and stop-loss discipline inside tax-advantaged accounts. Whether the trade wins or loses, the lesson is that catalyst plus confirmation beats narrative every time. Every simulated trade teaches us something. Let us review how yesterday's contrarian Tesla position performed and what we are adjusting going forward. Yesterday's weekly hold was Tesla. It was a contrarian fate of negative analyst sentiment following recent price weakness. The bet was on an eventual relief-driven rebound. Entry was at $365.86 on Monday's open. Exit was at $360.59 on Friday's close. The result was a loss of 1.44% or $14.40 on a $1,000 simulated position. Running total now stands at negative $44.91 across 4 trades. Win rate sits at 1 win out of 4 total trades, or 25%. Current streak is 1 loss. The contrarian setup lacked immediate positive catalyst confirmation and volume support. That allowed negative sentiment to dominate through Friday. We must tighten entry rules to require either an earnings revision or clear technical reversal before fading sentiment. Losses like this reinforce why we simulate first and demand multiple aligned factors before committing capital. Portfolio statistics show total trades at 4. Win rate remains 25% with 1 win, 2 losses, and 1 break even. Cumulative profit and loss is negative $44.91. Average return per trade is negative 1.12%. Best trade delivered plus 4.44%, while the worst was negative 7.49%. Our artificial intelligence analysis is learning from patterns like missing confirmation and is adjusting entry filters accordingly. While we learn from our simulated results, there are several other timely developments worth a quick look in today's quick hits. Toronto home sales snapped a losing streak as lower prices brought buyers back. The Greater Toronto Area resale market tightened in March with sales up year over year, new listings down, and average selling prices lower than March 2025. For Canadian investors, this improves housing affordability and may support related consumer and financial stocks inside tax-free savings account portfolios. Bill Ackman proposes a $64 billion merger for Universal Music to address underperformance. Pershing Square's offer follows Ackman's admission that his stake has languished. Investors should monitor whether the take-private premium creates a floor or opens arbitrage opportunities in the broader media and entertainment sector. UBS downgraded First Horizon, citing limited upside. The rating change highlights banks facing compressed net interest margins in the current rate environment. Canadian investors holding United States financials in registered retirement savings plans should review exposure to regional banks with similar profiles. A cold spring slowed the maple syrup season across the Maritimes. One Prince Edward Island producer is significantly behind schedule, raising concerns about 2026 supply. While niche, this illustrates weather-driven commodity tightness that can create asymmetric opportunities in Canadian agriculture and related equities. Finally, let us wrap up with a couple of powerful free tools that can help you stay ahead of rating changes and sector rotations. The first is the Seeking Alpha Rating Change Scanner. This free or premium screener surfaces real-time analyst rating upgrades, downgrades, and target changes. It offers one-click filters for market cap, sector, and price reaction. Today, it would have flagged both the Frisia downgrade and StoneCo upgrade within minutes of release. You can rank by magnitude of price move versus historical reaction. The edge comes from pairing the scanner with your own volume filter to avoid false signals. Canadian users can export results directly into Questrade or Wealthsimple watch lists. The free tier is sufficient for daily scans, while premium adds backtesting capability. The second tool is Yahoo Finance Sector Heatmap plus News Filter. The interactive heat map lets you layer real-time news sentiment and pre-market movers on sector performance. With health insurers jumping after the Medicare Advantage rate lift, the tool instantly isolates the entire subsector move and surfaces correlated names. Set custom alerts for keywords like payment rate or Medicare to catch policy-driven rotations early. It is free for all users and works best when combined with your broker's options chain for hedging ideas. Before we wrap, keep an eye on how the floating rate note ETFs react if oil stays above $110 tomorrow. That is your modern investing techniques for today. Subscribe, leave a review, and we will be back tomorrow with more market intelligence. This podcast is for educational and entertainment purposes only. Nothing discussed constitutes financial advice, investment recommendations, or solicitations to buy or sell securities. The practice investment of the day uses simulated trades with no real money. It is a learning exercise to demonstrate analytical techniques. Past performance does not predict future results. Markets involve risk of loss. Always do your own research and consult a licensed financial advisor before making investment decisions. The host and NARA network have no fiduciary relationship with listeners. This podcast is curated by Patrick but generated using AI voice synthesis of my voice using ElevenLabs. The primary reason to do this is I unfortunately don't have the time to be consistent with generating all the content and wanted to focus on creating consistent and regular episodes for all the themes that I enjoy, and I hope others do as well.